What to expect from Finance Minister Nirmala Sitharaman's new budget? Mr. Deepak Jasani, Head of Retail Research HDFC Securities, predicts what Budget 2021 may look like. It's possible that there won't be any major innovations or reforms with direct or indirect taxes, as the FM has introduced a new tax regime in just the last budget. That said, you may expect some taxation changes with regards to capital market investments. The FM is expected to focus on boosting manufacturing through schemes such as the production-linked incentives. The PLI scheme paves the path for job creation as products are manufactured in India. There may be an incentive in fund allocations for social sectors entities like MNREGA, Education and Health Ministries. There are also chances of a new cess, known as the Corona Cess, introduced in order to meet the costs associated with the new COVID vaccine. The FM may introduce schemes to boost consumer and capex spending in a bid to kickstart the recovery of the economy. Disinvestment target for the next year is likely to be ambitious, as certain planned investments for financial year 21 will spill over into the next fiscal. With regards to fiscal deficit, Mr. Jasani predicts that it is expected to rise to 7.6% of GDP in financial year 21. Also, the combined centre plus state fiscal deficit for financial year 21 is expected to be 12.3% of GDP. For financial year 22, it is expected that the fiscal deficit target from the state and centre will be at 5.2% and at 4% respectively, making it a combined deficit target of 9.2%. HDFC Securities Retail Research expects that the FM may focus on the PSU sector. She may introduce schemes to incentivize PSU managers by giving them more freedom and linking their pay to performance and/or stock price movement, making targets based on RoE or RoCE, etc. Don't miss a minute of the Union Budget 2021 live updates. Visit hdfcsec.com.